Welcome back to Reverse, where we help you transform your mindset and take control of your financial destiny. In today's video, we are talking about a very important topic that so many people overlook: car financing. Buying a car is a very exciting milestone, but when it comes to financing, many people end up making choices that might not align with their long-term financial goals. Whether it's your first car or your fifth, understanding the psychology behind car loans and financing options is critical. So today, we are going to dive into the emotional and financial aspects of car financing. We'll talk about the psychological factors that play when buying a car, how to approach auto loans wisely, and how you can make decisions that benefit your wealth in the long run. The psychological pull of buying a car. For so many people, buying a car isn't just a financial transaction, it is an emotional one. We often buy cars not because we need them, but because they represent status, freedom, and security. The excitement of getting a new vehicle could cloud our judgment when it comes to making smart financial decisions. Car advertisements play heavily on these emotions, often emphasizing how owning a specific car could elevate your lifestyle, enhance your image, and improve your quality of life. But here's the truth: car purchases are typically depreciating assets. This means the value of a car starts depreciating the moment you drive it out of the lot. So, how do you balance the psychological pull of buying a car with the need to make sound financial decisions? That is what we are going to explore. Why are people rushing into car financing? It is easy to rush into financing a car, especially when it's something you want right away. A shiny new car is tempting, but it's important to slow down and assess whether you're making a sound decision based on your financial situation, not your emotions. Here is why people rush into car financing. Number one is instant gratification. The desire for something new or luxurious can override the logical part of the brain. This can lead to people buying cars that are above their budget. Number two, social pressure. Social media, friends, or family can influence people to keep up with the latest trends in vehicles, often pushing them towards a bigger or more expensive cars that they cannot afford. Number three, the desire for freedom. A car symbolizes independence and freedom, but that doesn't mean you should go into debt just to feel free. It is very important to balance desire with reality. These are things to consider before financing a car. Before signing that auto loan, it is important to step back and ask yourself a few questions. Number one, your current financial health. Do you have a stable income and sufficient savings? Can you comfortably afford the monthly payment without sacrificing other financial goals? If you're carrying credit card debt or have no savings, it may be wise to hold off on financing a car. It is better to focus on building a solid financial foundations first. Number two, the total cost of the loan. Car loans often come with interest rates that can increase your total costs. Be sure to look beyond the monthly payments and understand the total amount you end up paying over the life of the loan. Remember that car depreciation continues the moment you purchase the car, meaning that you could be paying for a car that is losing value every day. Number three, the loan term. While it may seem appealing to take a loan with longer repayment term to reduce your monthly payment, this can often lead to paying significantly more in interest over time. Choose a loan term that is manageable but also short enough to save on interest. Number four, the type of car you want. Don't just buy a car based on looks or perceived status symbol. Focus on value. Is this car practical for your need? Can it be maintained easily? Does it fit into your long-term financial picture? Consider the cost of ownership, including insurance, gas, and repairs. Psychology of debt. How to handle car loan payments. Taking an auto loan means entering into a long-term financial commitment, and how you handle the debt can significantly affect your financial mindset. Car loan stress is a real issue. If your payments are too high, it can negatively affect your day-to-day life and your overall financial health. On the flip side, smart car loan management can have a positive impact on your financial well-being. Here are the few strategies for managing the psychological well-being of car debt. Number one, be realistic about your budget. Stick to your budget and resist the temptation to upgrade or get a fancier car than you can afford. Many people let emotions drive their car purchase decision, but this leads to financial stress later on. Make sure your car fits into your monthly budget without stretching it too far. Number two, refinance when possible. If you've already taken out a car loan but have found out that interest rates has decreased, refinancing may be a smart option to lower your monthly payments or reduce the total amount you pay over time. Number three, pay off loan quickly. If you can, try to pay off car loan earlier than you planned. Making additional payments towards the principal can save you a lot of money in interest over the life of the loan and reduce the time you're committed to paying off the car. Here is how to approach car financing wisely. Financing a car can be a great option if followed correctly, but it's essential to approach the decision with clear and rational mindsets. Here is how to make sure that you're financing the right car for your financial situation. Number one, start with a budget. Establish a clear budget before you even look at cars. Calculate how much you can afford to pay monthly without affecting your other financial priorities, such as saving, paying down debt, or investing. Stick to this budget when shopping for cars. Number two, understand the loan terms. Before agreeing to any financial options, make sure you understand the loan terms completely, including the interest rate, repayment schedule, or any hidden fees. Don't let the allure of lower monthly payments blind you to the full cost of the loan. Number three, do your research. Shop around for the best financing options. Don't just settle from the first option you get from a dealership. Compare rates from banks, credit unions, and online lenders to ensure you're getting the best deal possible. Number four, consider depreciation. Cars depreciate over time. Ensure the value of the car that you are financing won't drop too quickly and leave you upside down on your loan, meaning you owe more on the car than it's worth. Number five, plan for maintenance. Remember that the cost of owning a car isn't just about the loan payment. Plan for the cost of insurance. Plan for the cost of insurance, maintenance, and repair. Factor this into your budget before deciding how much to finance. In conclusion, car financing can be a smart way to get a vehicle, but it comes with both financial and psychological considerations. By understanding the emotional factors at play and assessing your financial situation, you can make an informed decision that sets you up for long-term success. Remember, a car is a tool for mobility and not for status symbol. Make sure your car fits your needs without derailing your financial goals. Financing a car should align with your long-term strategies for wealth building, not just an impulse purchase. If you found this video helpful, make sure to like, comment, and subscribe for more tips on personal finance and wealth building. Until next time, flip your mindset for your wealth.